For 2 weeks, I ran a free Discord community full of supply and demand traders, and I wanted to share with you our most recent coaching call together, going over trade reviews, how to properly document and trade journal the trades, trading psychology, how to create a trading plan, and so much more. This is something we do twice a week in our coaching calls with traders in the Moneyball Trading Program. I wanted to open up this group for just 2 weeks to see where the average retail trader is making mistakes with this trading strategy, and so that I can best help you guys. So if you would like to be in future calls like this and learn how to properly implement this system, then it's a great time to join, because just for this weekend, it's going to be a 3-day 30% off to join the Moneyball Trading Program. You'll hear more about that later, but till then, we're going to dive deep into the system and the mistakes that I see that these traders are making over the course of the last 2 weeks. So I appreciate if you guys like the video, subscribe, and if you have any questions, let me know in the comments below, and let's get this meeting started. Well, let's get this meeting going for our last coaching call for this little group that I've been running for the last 2 weeks. Now, I must say, the difference so far between the quality of trade setups that you guys have taken compared to the first week is much different. The first week when we had this meeting, I noticed a lot of people were complaining with like lower win rate, not taking good quality trades and stuff like that. And I grilled you guys for that first meeting about what a good quality setup has. And so when we were looking at these trades on like the S&P 500, these are like countless videos I've done, and it's a recent video I uploaded talking about my 3 setups and what I require in each setup, okay? And one of the photos I was sharing with you guys was talking about what I always want to see in a trade setup when it comes to a quality entry time frame zone. And this has been heavily back tested and reviewed, live trades and all that. And time again, these are the 3 things that jump out the most, okay? And in fact, we haven't had our one-on-one yet, but he was reaching out to me, and we'll have a look at 1 or 2 of his trades. And this is something I pull up for a lot of my videos. We're talking about quality zones, and his quality zones, 22 trades, 19 winners, 3 losers, versus a poor trade, 1 winner, 5 losses. It's a massive difference, so we need to be able to make sure that we know how to identify a quality zone versus a poor zone, right? It was the same thing with, other traders looking at what's the difference between a trending market versus a counter trend market. They're all very important stats to figure out on what makes a quality setup, okay? I've talked about this before, talking about a good setup versus poor setup. Statistically, a lot better win rate, and the same thing here. With this guy, good quality setups, 12 winners, 5 losses, 3 wins, 6 losses. These are all things I do with people in the program, where I look at all of their trades and I get them to come up with like 20 different stats to figure out what a winning trade setup has in common versus a losing trade, okay? And time again, it's a bunch of these little things that we notice each time that make a winning trade setup. And I see a lot of people in this little free group that I was running with this little community not doing any of those things. And I grilled you guys for that first week about what you are doing wrong, okay? And if we actually looked at members trade review tab, so in this case, I always require in every single trade that I take, where's this? Every setup that I take, I am going to see a pivot point zone being removed, a break in downward momentum line, and a strong quality zone being created. That's going to be number 1, hands down the most important. The whole concept of supply and demand is strong imbalances, so I need prices to go at least 2 to 1 within the first 1 to 3 candlesticks. Not only that, number 2, what makes a quality zone is we remove an opposing pivot point zone, okay? We want that, so we're just gonna go remove. We're just gonna go R for remove. And then number 3, the most important, is going to be break in momentum line. It's not the most important, but all of these 3 things are extremely important. I will not take a trade setup unless I have all of these 3 things. If I have 2 or 3, I don't take the trade, okay? And now all of this has to occur within 1 to 3 candlesticks. I know my drawings are very horrible, but I think you guys understand. Yao, I think I got your name right. Can you hear me? Do you understand?
Yeah.
Right?
Yes, sir, I do. It kind of
2-to-1
gives you some.
imbalance, remove the opposing pivot point zone, and break momentum line. This all has to occur within 1 to 3, absolute maximum 4 candlesticks. If it takes longer than 4 candlesticks, I am not ever going to enter in that zone. Okay? So this is why for the difference of the time frame setups, the multiple time frame setup, we need price inside higher time frame supply or demand. We need that same old momentum break. We need that pivot point zone being removed and a strong quality zone being created. Okay, that is the multiple time frame setup. And then eventually people came to me in the private group saying, hey, I have a lot of really good lower time frame setups, but I'm not sitting inside a higher time frame zone. So can I take the trade? Right? Originally, many years ago, we would not take these trade setups without it being inside higher time frame zone. But until enough people started coming to me saying, hey, this is a problem. I see these really good lower time frame zones that I want to trade at, but I'm not located inside higher time frame. So that's why we took it to our back testing meetings and we noticed, okay, what happens if we just trade these zones straight up? No matter what time frame, what is going on in the higher time frame, we just trade these one time frame setups straight up. The lower time frame is still going to look the exact same. Okay, we still need the momentum line being broken, we still need the opposing pivot point zones removed, and we still need the 2-to-1 imbalance. Okay, but when we started back testing this and we came up with like a quick beta test of 40 trades, and then we did another 30, and then we did a 50, right? We were noticing when we were reviewing that these worked extremely well only when you were trading with the higher time frame trend. So yes, we only use one time frame, but we have to be trading with the higher time frame trend direction. Do you guys understand what I mean?
Yes, sir.
Right? So if you're in a 4-hour downtrend, just creating lower lows, lower highs, or whatever, it looks like this. That's when we can enter smaller time frame, one time frame short setups. We would not enter buy setups unless we are sitting inside a higher time frame demand. Okay? So that's why the one time frame setup was created. All right? And then we have the confirmation 2.0, still relatively new, but that's when prices go into our higher time frame zone, and then we kind of get a confirmation setup created from down here, but we don't get the setup, we don't have price pulling back, but instead it continues to make new like higher highs, higher low pivot points. And what you're trying to do is now enter on that pullback, because then people would come to me saying, okay, we missed the entry, prices didn't pull back into that entry time frame zone. Instead, it continued to push in the direction that we wanted price to go. So what happens if we start, looking at buying at these new zones or selling at those new zones as it's falling, right? Turns out it was decent. All right, it's probably the third quality setup. All right, the best is the multiple time frame. Second best is the one time frame, and then the third place would go to confirmation 2.0. All right, 50% of my trades consist of one time frame setup, probably like 65, maybe 70%, and then maybe like 30%, about 30% are the multiple time frame setup. Okay, but going back to the quality aspect, like this was last week's trades. This was a trade review. I don't know who handed this in. Checkmate was handing this in. Yeah, he's correct. Broke downward momentum. This was the momentum line I drew. So I corrected him on that. That would be the momentum line. We have a nice imbalance, but we never removed this zone. Okay, this is very important. I looked at the stats. I just showed you guys the difference between a quality setup. Do I have to re-show you guys? Okay, what is a quality setup? There's obviously a lot more, and we'll talk about them. But just right off the bat, a quality zone is when you're going to get, break and imbalance, opposing pivot point zone, quality zone created. All right, that's a pretty big difference. All right, same thing up here, same thing with this guy. It's the same thing with everybody I go back to. So it was actually a really good thing to see when I compared to the first week to the second week of what you guys were handing in as in trade reviews, night and day difference. So that was a good thing to see. And that was one of the trades. Another one was by this guy, Neiman. Like, what are we doing here? I think this still ended up like selling off and it was a winner or something like that. But still, this is not a setup that I was short at. Okay, it might have broken momentum line, but look at this imbalance. All right, it's gone like not even 1-to-1, then it base slowly drops. That's not something I want to be trading as a quality setup. Okay, you're going to notice all those things that I talked about are going to be accomplished within the first 1 to 3 candlesticks. Okay, like even this guy, this was from last week. It was good to not see these types of trades. Like he was shorting this little supply zone up here. Never broke momentum, never removed an opposing zone, never removed an opposing pivot point zone. And the imbalance is not very special. So that's not a trade setup I would take. Okay, I think he shared another one. Ended up being a winner. Congratulations. But over the long run, I'm telling you, it's probably not going to do well for you unless you get those 3 things. I don't think I've ever had a trader come to me in my one-on-ones with traders I do that are working with me directly, come to me with a way better, even making money. I've never had a trader come to me making money taking setups that look like this. Okay, whatever, it's your money, it's your time, it's your life, you do whatever you like, but you tend to notice these little things over 10 years of experience and doing a lot of these one-on-ones, right? So I wanted to quickly look at the other group because I wanted to look at some of these trade reviews and I wanted to talk about kind of what is a better setup. Okay, quickly talking about too much time. This was a photo I wanted to quickly share because I think somebody asked me at what point, like, what other things do I look for? And I was kind of explaining that there's a concept of how much time is too much time for prices to return, right? And so what we kind of figured out, once again, this is through review, back testing, mainly reviewing, right? And we're going to touch on journaling as well because that's a big problem I see people. But I want to first start off this meeting by going over trade reviews and then we'll circle into journaling and questions and trading psychology. So on this was something that we came up with noticing, like after, we had hundreds and hundreds of trade reviews and I was asking selected traders who are already doing really well to come back to me with these results and what they notice between how long it took prices to come back. So an example of what I mean by this is, say for example, you have a zone that gets created and you're waiting for the pullback, but instead it doesn't pull back, it kind of just goes like this. And now it comes back. Versus if prices just came back right after that point. You know what I mean? And so this was the kind of outline of the timetable that we came up with, depending on the time frame that you're using to use as your entry time frame. And this was a significant difference between the wins versus losses. So if you're going to be entering on a 1 minute or 5 minute, I would not recommend entering on those trades if it's taken more than 5 hours to return. Statistically, there's a pretty big difference. If you're going to be trading a 1 minute zone or a 5 minute zone, you're trading that session zone, right? You're trading with the same basic traders that were buying or selling in that area, okay? And so if you're using like a daily time frame as your entry time frame, well then it's going to be valid for like a month to maybe a month and a half, all right? 30 to 45 days, all right? And it's the same thing for these 1 hours. If you're gonna be trading a 1 hour, I typically would not recommend going past 48 hours. 48 hours, I would no longer recommend taking a trade once it pulls back into the zone. Do you guys understand what I mean?
Yes, I do. Yes, I do.
Okay.
So yes, we do. Yeah.
Any questions on that?
So, for example, if I have a high time frame demand zone on the 1 hour, but it was like 50, 60 hours ago, it might not be as much quality, right?
What I'm saying here is for your entry time frame.
Oh, okay.
Entry time frame. Just keep in mind, like if you got a pullback into a 1 hour zone that took 72 hours to come back, chances are it's going to be a counter trend market now. You understand?
Oh, okay.
You understand that, right?
Yeah.
Yeah, so if it's taking like 72 hours for prices to come back into a 1 hour zone, right? Say, for example, you have your zone and it's taken like, that's 48 hours and then 72 hours. Well, by that time it's coming back, it's had all this time, right? This time when it's coming back into your zone, it's going to be in an uptrend. So you need to keep in mind, you're going to be using that higher time frame zone in a counter trend market. And we talked about this statistically, and a lot of people come back to me, like I said before, trending versus sideways, okay? Trending versus sideways, all right? Trending versus sideways. So there is a pretty big difference. Sorry, not trending. It's with trend slash sideways or counter trend. So with trend slash sideways is the same. Counter trend is its separate category. You guys understand? So it is very important.
Yeah.
So that's one of the things I noticed you guys were like taking a lot of counter trend trades. I think it's a big retail thing to do. And we talked about in our Sunday meeting about the currency strength index and why people are trying, why so many traders are trying to, buy this Japanese yen when it's the weakest performing currency over the last 5 years, over the last year. Like over the last year, it's down like 12% or something like that, right? Why are we trying to swing long the worst performing currency? Why are you trying to swing short the S&P 500 when it only goes up, right? Why are we trying to enter 2-hour, 4-hour short positions, right? Thinking that this thing's going to crash all the way down here. You're asking to lose money. You're selling in a very counter trend market, asking for 5-to-1 reward to risk in a very counter trend market. It's like the most delusional thing that a trader can actually do. Okay, you're trading a massively counter trend market and you're asking for 4-to-1 reward to risk. Like, are you stupid? Doesn't mean it can't work, but you're not going to have a very high win rate trading with that. Okay, it's based off of my experience, in my opinion. I don't know, but after trading for 10 years and looking at thousands and thousands of trade reviews, I think I got something under my belt to talk about this strategy and talk about, what quality setup, what dignifies as a quality setup versus a non-quality setup, right? It's up to you if you want to, use that information. Okay. Right. So there's that, but then there's also how far did prices go? So this was a trade review by Tyson that he was taking. We'll have a look at it. So there's another thing like, okay, well, how far does prices go until it's no longer relevant, right? If it goes all the way up here, is it really a relevant trade that you should be buying back into now, right? What about the price action coming in? What about trade management? How should you be managing the trade? Is there news or fundamentals? How's the arrival? There's so many little things that go into it that you can't just strictly go based off, oh, it broke momentum line. Oh, it broke opposing pivot point zone. It's got 2-to-1. It has to be a good trade. No, there's a lot of other little things that have to go in. But it starts there with these setups, okay? Do you guys understand what I mean?
Yes, sir.
Yeah, it's hard to pick that up over the course of this little meeting that we're having. I totally understand it. So that's why, it takes time to learn this type of stuff. But that's why I try to work with those traders directly one-on-one in the program. And sometimes it takes them 2-3 weeks to understand that concept, right? Versus trying to watch a video and trying to piece it together. It's a lot easier just to ask a question directly or get me to go over it during a meeting, hear back from my trade reviews, right? It's night and day difference versus if you're just trying to go at it solo. So on this one, why do I like this multiple time frame long setup? I love the fact that prices are pulling back into this area of 4-hour demand zone right here. Very strong in balance, okay? Trend, uptrend slash sideways market. Oops. What did I do right there? Uptrend slash sideways market. Maybe we would have broken upward momentum line. We removed an opposing zone. So I would call it like a sideways slash uptrend market. Prices are pulling back into his higher time frame zone. We're looking for buying opportunities. Do you guys agree?
Yeah.
Okay, so he went down to his lower time frame and he's got this lower low, lower high, lower low, lower high. Boom. Okay, it's the same thing I've just been talking about. We're going to get the momentum line break. We're going to get the opposing zone removed, and we're going to have a 2-to-1 imbalance. All right, that's exactly what we have right here. Okay, sorry it's a little bit blurry, but I'm trying to scroll in so that you guys can see this. Okay, imbalance, imbalance, imbalance. So maybe took 4 candlesticks. Okay, but within those 4 candlesticks, it's blown past this pivot point zone. It's broken the downward momentum line, and he has his little drop base rally down here. Okay, so now how he's entering this position is he got long on the pullback right there. Okay, I like that long. Now, he was managing his position. He said closed trade didn't get the push I was looking for. Yeah. Okay, so we were talking about this over the last couple of weeks, and we've been talking about trade management because I think it's a good concept early on just to set your orders and walk away. Like, I think that's a good mechanical way early on. But if some point you really want to like elevate your trading, And I wouldn't really recommend this early on until you actually have a good understanding of a trading strategy of what you're trying to do and you understand everything in and about it. So over the last couple of weeks, this is a guy that was sharing with you the stats, talking about, quality setups, and he has like 19 winners, 3 losses or something like that. He's fantastic. He's picked it up extremely quickly, and I've only been working with him for like 3 months. So yeah, he's doing extremely well. But we were talking about trade management and what's the best way to trade management this type of setup. And so we were getting filled here on this type of entry right here. And I was explaining to him, after some point, I don't just leave my stop loss saying, oh, I'm going to get stopped out. I walk away. I don't do that. What I'll do if it starts moving in my direction after a certain period of time based off of the price action, based off of how I feel about it, okay, that's when I'll start moving my stop loss up a bit. And so after this point, it started rallying up, I would be looking to move my stop probably up to there, okay? Because I understand after thousands of trade reviews, and you'll probably notice this with yours as well, that normally if prices are unable to break those previous areas and it goes deeper into your zone, it tends to fail altogether. Do you guys understand what I mean by that?
Yeah.
Right? And so we look at a lot of these trades, and it's a really important concept to understand, is like the general price action, how far price is moving and stuff like that. It's so important. We'll keep an eye on this concept, and I'll explain it to you more over these trade reviews. But we're getting long, it's rallying up. I know I don't want to have my maximum loss still. I want to move my probably stop loss up to here as a more of a structure here, because I know if prices are going to reverse and go deeper into the zone, it's probably going to end up fail, right? And it did do that, okay? It did end up, we wouldn't have gotten stopped out here. I mean, we would have gotten stopped out here, right? But this original stop loss never did. But it did rally up, create a new high, but then it ended up blowing back down and selling off. Okay, so I guess technically it would have been a loss, okay, anyways. But over the long run, you're going to notice that's a better way to most likely play your stop loss, right? And so I think there was like, in this trade review, I noticed some people took this, and I think it's a big problem. Pound New Zealand, this was a trade that came out this week during the certain news events. And if you recall, let me have a look. Pound New Zealand. So on this setup, I don't really like his pivot points. I don't really like using this as a pivot, right? Usually pivots are going to look something like that. I don't really like using that. So that's my one con to a setup like that. Regarding his zone, everything else, it's pretty good. I would agree with him. What I wonder is why he's managing his position like this. So he's getting filled right here, okay? And prices just skyrocketed from here and goes all the way up here and just misses his take profit. Actually, he got long here. Never mind that. But even still, why are you re-entering a position that's already gone so much in your favor? The chances of this zone holding for a second chance after it's already gone all the way up here, like I just said before, thousands of trade reviews, man. And we'll notice that if prices are going after that big of a move and it pulls back, it's a very high chance that it continues to fall and break the zone. Do you understand what I mean, guys?
Yes, I do.
Okay, good. I just want to make sure, right? This is a good time to ask questions on this type of stuff, because I don't really ever recommend just like setting an order and be like, okay, I'm gonna walk away now, and you go to Chuck E. Cheese's and go play video games. Like, I don't know what people do, but we don't just set our orders and walk away. All right, we always have to be managing our positions. It is very important. Okay, the question is like, what makes the best trade management? It's always different depending on the setup. Okay, and hopefully I can maybe talk about these types of trade setups over time. Like here, Alosh, he was taking this long setup. Why? Aside from me disagreeing with his lower time frame, I think it's a horrible lower time frame confirmation. I disagree with everything on this. Why is he entering a position? The better question is, why is he? That is a valid question. Why would he enter this? But number two, why is he remaining in a position that just completely dies out like this on a 5-minute time frame, going into a session like the the difference between the US session and the Asian session. He's trading in that gap when no markets are open and you're going to hold a 5-minute time frame zone. It's extremely stupid. Okay? And we call this a dead fish, is when prices just die out here altogether. Okay? He gets filled. Like I said, I'm not a fan of this quality setup. I don't think it's good, and I grilled him for it, but in a loving way. But he can handle it because he's already been working with me, and we've already done our one-on-one. But he's falling back into taking horrible setups like this, right? But he gets filled, okay, right here, something like that. I might have, if I was taking this maybe over here is where I would like to get filled. But why are we remaining in a position that's just died out altogether here? After some point in time, I'm going to close this trade because I accept that, hey, it hasn't gone in my favor. Usually these setups occur very quickly. You'll know quickly whether it's a good position or not, right? It's not like in a minute but you'll know within the first, 1 to 6 candlesticks how that zone is going to typically play out, right? And if you know it, you just comes in and it just kind of, just dies out and goes like this and just goes lower, like that's not really good. And we're not really pushing up to here and making these into these areas. You guys know what I mean? Right? That's kind of a pretty bearish sign that this zone is going to fail and drop altogether, right? So maybe I just close the trade altogether and I say, you know what? I'll take 30% of what I'll lose on that trade and I'll get out of the position. And a lot more times than not, it will continue to just fall and I would normally get stopped out. But of course, there are times that it will continue and then it'll just shoot up from there. But this is a market that you don't want to be trading in after this amount of time. This is just called a dead fish. Do you guys understand what I mean?
Yes, sir.
Good, and I want to talk about another thing here, okay? This was a trade setup that this guy was taking here. Quality-wise, Yago, please, talk to me. What do you think about this?
Let me see. So, we broke the momentum line with the one candle over there. Then, where did it get filled? Oh, damn. So, it took a while for it to get filled, and it did form an uptrend, so I wouldn't say like the chances of the zone working would be too much.
Okay. Yeah, I would agree with you. The quality of the lower time frame is very nice. Okay, 100% agree with you. But this is what I mean by what I've been talking about for the last 10 minutes is we can't just use these 3 things and be like, oh, it's a good trade. I set my order and I walk away. We don't do that. All right. Yes, the setup is very nice. We have broken this clear upward momentum line with this candlestick, open, high, low, closing outside of it. We have blown through this pivot point here. I 100% agree with that. We have a very strong imbalance to the downside. We have all 3 of what I'm looking for. But notice, like you just said, notice how long it took prices to come back, okay? Came back. Normally, I would want the pullback to occur right here. If not, this is when I would want this pullback to be coming right back in there. It did not do that, okay? It actually continued to make new lower low, lower high altogether, okay? But then at this point, look what it's doing now. It's just creating higher highs and higher lows at this point. So at some point, you got to understand this. Do you see what I mean? Like what this market was looking like at this point? Like it was like lower lows, lower highs, right?
Yeah.
And then at this kind of point, we start seeing this general, this would be like a general momentum line to the downside being broken, right? Okay, we're starting to lose momentum and, we're starting to lose downward momentum line, okay? That's not a very good sign if we want to get short, okay? So we start breaking momentum line and now we start creating, look, higher highs and higher lows, higher highs and higher lows, okay? Yes, this might be a zone that holds for a little bit, but it's not going to be a zone that I'm getting into this trade thing. It's going to go all the way down here. You understand that, right?
Yeah.
So I would not enter on a short like this. But if I did, okay, if I'm getting short here, I'm managing this position by at least somewhere this time. Like you got to keep in mind, like this is now the the upward momentum line to the upside. Don't be surprised if buyers step in there. I would not be surprised. All right, so I just don't think this is a wise investment to get into after this amount of time and how price is pulling back into the zone. You understand?
Yeah.
Okay, good. So you can start to see like there's a lot of other little things that you have to consider. It's never just cut and dry. Oh, we're trading head and shoulders, it has to go down. It's such a delusional mindset that I see a lot of retail traders making, and it's the reason why they get so emotional and so like emotionally attached to these trade setups. Okay? And another one talking about the price action. I posted it for you guys so you guys could see what the analysis was, and I was talking about how we're probably going to see this zone being removed. It's a very strong indication, okay? Let's just imagine with me that we were getting long at this demand zone. It's a very good zone. It's a very strong imbalance to the upside. It's removed supply. I agree. We could look for buying opportunities in here when prices arrive. But if you're long in this position, Yago, okay, do you really feel confident in this after it just rose up from here to here and now we're unable to break these previous highs? Does that really look like a strong market to you? No.
No, it doesn't.
Ideally, if you're going to get long in a market like this, you would think that when prices come back down and say we get this initial move, you would want it to break that previous high, right? That's a sign of strength. We're unable to break any of those highs. That's what I mean by this, right? And understanding like the general price action, this can happen when you're thinking about getting long or short, or you're in a trade and we're starting to move in that direction. And what happens when we pull back? Next time when we rally up, are we breaking that structure? Are we making a new push to the upside? No, we're just dying out, right? We're unable to break those highs and we're going lower. So you guys can see this, right? Lower, unable to break, just dead fish, okay? That's not a strong sign, okay? And so that's why we were talking about this, saying, I was posting this before this big fall. I think it was like right here at this time. And we're like, buyers unable to take control here, showing a sign of weakness. Does this mean that prices have to go down? No, don't ever get attached to that. It's one of the stupidest things that you could do. But it's a very strong sign of weakness that a more experienced trader can play to the downside and look for shorts. Yeah, so like a more experienced trader, for like early on traders, I wouldn't encourage traders to just jump into the trend to the short side. But I'm okay with this type of mindset of like, hey, I'm very bearish this. I do believe it's going to fall. Okay? Why not look for shorting opportunities? There's nothing wrong with that, right? But I want to make sure that it's going to be still a quality zone, right? I would still want to make sure that I can maybe get a pullback into like maybe a supply zone. Maybe I want to be, selling the pullback back into that zone. Some people might sell the breakout to the downside altogether. I don't really like doing that. I'd rather wait for prices to pull back than get short, okay? I will look for one time frame shorts to the downside. Do you understand what I mean?
Yeah.
Okay? Crazy. All right. Does that, interest you? Like, I don't know, what are your thoughts on that?
No, yeah, so I understood that pretty well because it's a way to see how price is like losing strength on the
Mm-hmm.
demand zone, and
Yeah.
how you could use that to your advantage and flip your direction and
Mm-hmm.
use the one time frame setup.
Yeah.
That's something I'm finding really interesting. The one time frame setup, I got too attached to the multi time frame setup, and I'm kind of noticing how it might be really good to do some back testing on the one time frame setup.
Yeah, so this is more of let me show you an example on gold today. So gold 1 minute had a really nice, right here. I was looking at this. It was a very choppy market over the last 48 hours. It's been very sideways. All right, I was talking to, his name is least profitable trader, even though he's like managing $200,000, but he's a fun guy to talk to. But yeah, we were talking about how we were going to see like breaks in the market. We were just sitting in the voice chat. It's just funny enough, like
Yeah.
running this group, man, like nobody joins the voice chat. Like you would think people want to learn and they want to speak and like, hey, I have questions for you. We'll join the voice chat. I'm just sitting in there all day, right? Or in this meeting, there's just 3 people in this meeting, man. It's crazy, man. It's actually crazy.
Yeah.
It blows my mind. Okay. Anyways, so we were talking about this being like a demand zone that was holding, right? And we're like, yeah, I'll look for buying opportunities if prices pull back into it, right? But then notice how, let's just imagine we were long. How would I manage this? All right. This is a very important concept that people have to understand. They have to. All right. if I'm buying the pullback and I'm getting long, and this is what's happening, I didn't actually. There was a really nice 50 tick entry. There was, but it didn't make any sense to me, so I didn't want to take it. Anyways, it did well. You know, it's rallying, it's going basing, but like at this point, this is not a very strong market. Okay, I would have thought if this was going to occur and be a good zone, it's going to take off to the upside by now, right? So at this point, I'm starting to think, should I just close my trade, or B, should I move my stop up, right? And say I'm risking $100 and now I turn it into like a $60 risk. You know what I mean? Because I know if it's going to break this level, it's going to shoot down to at least down here. Okay? That's how I'm thinking in my head. Okay? Now I believe it did go on to do that. I started thinking, oh, good. When could I flip this? I could flip this analysis and I could get short. Okay? Now, typically, when I'm going to get short on these, I would want a little bit more. The reason I was hesitant on this is because I'm very bullish on gold and it's very sideways right now. I just couldn't get a read. This is what the market looked like right now. I just really couldn't get a read on this if it's going to the upside or to the downside. But very short term, I was bearish, right? And I thought we were going to get a pullback probably down into this area. That's where I saw prices going to, down into this area, okay? Sure, some people might sell the breakout. Some people might sell the retest. I think that's fine, okay? Prices actually rallied up and actually sold off from there, okay? So it worked out extremely well. I'm okay with that. But what you need to understand if you're going to do that type of trading, it's almost impossible to trade like this if you're looking at 20 different markets. All right, you understand that. You can't do this if you are looking at 20 different markets, you know, combining two to three different time frame sequences. You have zero context of what is happening on these markets, right? If you versus you're sitting there looking at one photo, you can see one picture, one chart, like let's just say gold. Like we were watching this, we were looking at the order book, we were seeing the buyers, sellers coming in. We're just sitting there talking. Oh, look, a 200 contract buyer come in. How is it reacting off of this area, right? When prices rallied up, how did it react off of this little 50 tick zone right here, right? Well, we see this holding now. Why hasn't it taken off to the upside? We would have thought buyers are going to step in. It's a pretty bearish sign now. I could see some traders selling this to the breakdown. I don't like selling these breakouts. I don't personally like it. I would rather trade the retest into these breakout zones. That's personally how I would rather trade, okay? And we talked about that earlier this week, about the breakout zones and how I play them. You have such a better context of what is happening when you're just looking at one market to two markets or three markets versus if you're looking at 20 markets, right? And that was one of my questions. I don't know if he's still here, Manson, or it was the other guy. And it was this question talking about he's only getting 1 to 3 setups. Was it 1 to 3 or something like that? Setups a week, and he's trading weekly 4-hour time frame, looking at the 4-hour time frame as his entry. You got to understand, if you're swing trading a 4-hour time frame, that's, in my opinion, that's actually very normal to be looking at a swing trading strategy, and you're going to be entering like 1 to 3 setups a week. I think that's pretty normal. Okay, they're typically going to be higher win rate, and you can typically go for more reward to risk, but you get less setups. All right, that's just common. You get less setups if you're going to be swing trading. But I think a lot of people force themselves to look at the markets here. All right, they think they have the time to day trade when they really don't. Right, and they should probably be looking at swing trading or something like that. And that's something I noticed here in this group, when I think a lot more people should be looking at swing trading versus day trading, because they don't necessarily have the time. Right, they think that they can just get onto the computer, and like I see people playing video games. Right, they're playing Call of Duty or some other game. I don't know, I'm just listing off the top of my head. They're playing like Call of Duty at the opening bell, and they're playing Call of Duty. What are you doing? Right? If you want to become a day trader, this is the time that you have to be looking at the charts during the most active times of the day. I understand if you're like from London and you trade the London session, I totally understand, right? But, you know, even some people rolling out of bed 5 minutes before the open, rolling out of bed an hour after the open, right? Only going to be looking at the charts for 30 minutes. Every trader that I know that day trades is sitting there for at least a couple hours. You know, pre-market, they're up for at least an hour before pre-market, analyzing, getting ready for the day, okay? And then they're on the charts for at least an hour, okay? They're not on the charts for 6 minutes, and then they get off, right? And then there's a lot of work that goes on behind the scenes of prep time, What about review and journaling? Okay, there's all this prep that you have to do in reviewing and journaling, which, Yago, are you doing journaling?
Yeah, I am.
Yeah, it's one of the most important concepts that traders have to do. And I notice a lot of traders don't do this. And this is something I do. I hound on people to do this in the private group, because if somebody comes to me and they don't have any trade reviews, I can't help them. Okay, so there's one guy in this group, in the private group, who hasn't shared any of his trade reviews. Okay, he actually came to me. He was new about. He's been here for like 3 weeks or something like that. He comes to me and he's like, "Hey, I'm not getting good results." I'm like, "Okay, hey, thank you for letting me know. But I haven't seen you share any trade reviews." I searched up his name in the search bar. I tried to see his trade reviews, so let me see if I can help him. I search up his name. He doesn't have any trade reviews. I'm like, "Hey, I haven't seen you post any trade reviews. How can I help you if you don't share them? I don't know where you're going right or wrong in your setups." He's like, "Well, I've taken 25 trades and I'm winning about like 20% of them." I said, "Okay, I haven't seen any of these trade reviews. Okay, I can't identify where you are going wrong and right, so I can't best help you in what you're trying to do." Okay? And I said, "Hey, we have a meeting in 24 hours. I want you to share all 25 trade reviews in the trade review tab so we can go through everything and I will review every single trade." He does not share the trade reviews. Okay? I don't know what he is doing. Okay? Maybe he's busy with life. Maybe something happened. I don't know. I understand that. Okay? But if somebody comes to me and they say, "I'm not getting good results," and they can't provide a trade review or their last 10 trades, I can't do anything to help them, right? I can sit here and rattle off stats to you guys talking about, "Hey guys, like this is all really important stuff." But you need to understand, this trader who's doing this review is going to be night and day different than you listening to this right here. Because the trader that actually takes these trades, journals them, and reviews and sees it for his own eyes, knowing that these are his trade reviews, are completely different than a trader that goes and just looks at this and says, "Oh, well, clearly trending markets or sideways markets is important, right? I should probably stick to that," right? Versus the trader that goes off and actually sees it, he is a lot more higher probability that he's not going to make these mistakes, right? Or he's not going to be making these mistakes over here or whatever he has. Do you understand what I mean, Yago?
Yeah, yeah, I do.
Yeah, it's so important to be journaling and sharing your trades, because I can sit here and talk about how to do a top-down analysis and all that, but I understand there's a lot of confusion. You're watching 20 different YouTubers. You're trying to combine your own trading strategy. You're losing 3, 4 trades in a row. You get upset, so you don't want to journal. Every trader that I know journals their trade and reviews it, because we're always creating a better trading strategy. It never ends. This is why I say there's no naked girl at the end of the tunnel congratulating you on becoming a profitable trader. It's a never ending process of trading, journaling, reviewing, and adapting. It doesn't end. And so when we have these conversations with like a new trader, the conversations that I have with a new trader versus a more experienced trader are completely different. They're more like, if I'm talking to like a more professional trader, we talk about what our review process is, or like what was something that really, what if there was one thing that you would recommend to a profitable trader, what is that one thing that you would tell them to investigate into and look more into, right? In a trade setup, or how you view the market, or something that really helped you, or your journaling and review, right? That's typically a conversation that we're going to have versus people sending me messages, "What's your win rate? How many trades should I be taking a week?" They're more beginner level questions, right? And so it's a completely different conversation that we have altogether versus the two traders. But I understand, people are coming from different backgrounds and stuff like that. But yeah, journaling is very important. Yago, I wanted to talk about, the softwares that I would recommend. Did you have any questions on this so far?
No, I got that pretty well. The journaling
Good,
stuff.
good. There are certain ones out there that are free, like MyFX Book is something that you can use. You could use your own Discord server and just copy and paste the trades. And so make sure you take a photo of the trade review. That's a big thing, right? Is taking a trade review photo after what happened. And I talked about this, Yago. I don't know if I mentioned to you, but this is fine. But like maybe there's like a different trade that you shared. That's it's all right, fine, sure. But what I noticed, like some people will do, is they'll just take a photo after they get stopped out right here. Let's just say you got stopped out right here. They take a photo right here, right? Well, how do you know what happened from this point on? Did it rally all the way up here or did it continue to fall, right? This will help you know, like, hey, maybe you should have a wider stop, right? Or let's say, for an example, you got out half your take profit right here, okay? What would have happened instead of you journaling the trade right here once you got take profit? How many of your trades actually continued to shoot up to hit 5 to 1, right? Or how many of them reversed and stopped out and reversed altogether and maybe the other position break even? You understand what I mean?
Yeah.
Yeah, so there's so many little things that you can pull out of this, of, you know, journaling your trades and taking photos and having proper notes. There's no best notes, you know. So many, I know some people that write a freaking essay on how they managed it, all the little things that they see in a trade setup and all that. That's fine, right? And I know people that just post 3 or 4 things, okay? And I know some people that just post a picture, right? You know, I understand your way of thinking is going to change over time and like how you view trend and what you view a quality analysis, but you need to at least take a photo of it and provide a couple notes on, you know, the overall trade and what you saw, because you should be able to share it to somebody and they should know why you got long or short that position. You understand what I mean?
Mm-hmm.
So,
Yeah.
you know, there's a couple things. If I do a one-on-one with a trader in the program, I do it I just get them to make their own Discord and I get them to post their trade reviews and I join their Discord server and I have a look, right? So you could use your own Discord server. You could use my FX book. Those are free. Some people like Excel spreadsheet. Like this is like some people did like Chat GBT. I noticed that's what they're telling me. That's how they created these. Like Chat GBT, create me a tick and tally sheet or whatever of a list of 20 different things and it will create something like that. You know what I mean? And some people go all Excel spreadsheet out and it has like graphs where it calculates percentage as soon as you enter in the number. Yeah, some people get right into it, right? I like the good old fashioned pen and paper. I like doing that because I'm always testing and reviewing little things just whenever during a day. If I feel like reviewing something, I'll just quickly bust it out. You know what I mean?
Mm-hmm.
Good, good. And so like a couple paid ones if you wanted, like maybe like TradeZilla, I think is a common one, but also TraderSync, I know people use, and Etsy, I think it's ETSY, I think that's another common one. Those are kind of like the top 3 paid ones. I'm sure there's other ones out there, but if you want just free, the bare minimum, then my FX book, if you're trading currencies or CFDs, that's good. But Discord is like the minimum, or some type of journaling Word, Excel spreadsheet, or Word PDF, or whatever you want to use. That's just the bare minimum that, you know, you can use, and you can journal it saying, you know, if we went back here and we could just like journal this type of trade setup, let's just say gold, multiple time frame short, long, or you know what I mean? This is short, so I go like short, and you could go win, right? And so what you could do also is like you could use a search bar and you could just type in win and it will pull up any like trade reviews that you have of just winners, right? Or losers. And you can kind of figure out like what do you notice between your winners and your losers. And then you start reviewing to see like, does it have all three, a quality zone versus poor zone versus non-poor? And you go win, loss, and you look at all your trade reviews, right? And so that's why I will always say, you know, like that haunted house analogy where you walk into you go to a top of a hill. You've heard of that analogy I said? It's night.
I'm not sure. I don't think
Okay,
so.
well, you got a haunted house at the top of the hill. There's my haunted house. It's very scary.
Okay.
Yeah, skewed that one.
Spooky.
Yeah, and you got you and me down at the bottom of the hill. All right, that's me,
All right.
and that's you. All right, all right. You and I go up to the haunted house, and you're like, hey, let's go in it. And I go, no, I'm not going in that haunted house because I believe it's haunted. Now, I have never gone in there. I have never seen a ghost, but I believe in ghosts because enough people have told me that have gone into that haunted house have run out and came out with bad experiences seeing they had a ghost experience, right? Now, I have never physically seen a ghost with my 2 eyes, but I've had enough people come back to me and tell me, you know, there is a ghost in there. All right. So I'm not going in there. You decide to go in there because you don't believe in ghosts. So you're like, no, ghosts aren't real. I'm going to go in and I'll come back. And I go, okay, no problem. So you go up to the haunted house. You spend 5 minutes in there. 5 minutes later, you come running back out screaming, I don't know, like freaking out, right? And I go, what happened? What happened? And then you're going off, I saw a ghost, right? And let's imagine you actually saw a ghost. Okay, your life experience from then on out is going to be different. It's the snap of a finger. You're going to have a different opinion on this, right? Like your life changed before your eyes of you 5 minutes before going into that, you don't believe in ghosts to now all of a sudden you do because you had a first-hand experience. And this is what I mean when you see these setups for your own eyes and you journal and you review. Okay, it's night and day different than if you do the work and you come up with the setup and you back test, you journal, you review, right? And you see the difference between these stats versus me sitting here talking about what this means and right and why is it important for arrivals or quality zones or trend markets or certain zones versus other zones. You know what I mean?
Yeah.
You understand it way more and you have a better belief system, which is so important. Okay, I see it time and time again. Like we talk about psychology. In my opinion, it's the most overrated concept. It's not the most overrated concept, but so many people come to me and they're like, I have trading psychology problems. I think it's overrated for what people say it is. Now, yes, it is important, but most your trading psychology problems, like 90% of them, stem from lack of confidence, knowledge, and experience. I think those are the three things that will solve 95% of your problems. Okay? Now, it's very difficult for me to sit here and just talk about trading psychology. There's a list of 20 to 30 things that you could sit here and talk about, right? And maybe I'll try to answer some of these things, but I know a lot of people tend to have problems with this, right? Uh, Fear of money, right? In a trade, losing trades after 5 trades. I want you to understand, like, if you're struggling to believe, like, a trader that understands their trading strategy through knowledge and experience, they know how to trade it, they have confidence in their system, right? It's a complete difference when that trader has confidence in their system versus a trader that doesn't. Okay, so if you took me versus some other trader in this group, the confidence difference in mindset after 5 losing trades is going to be night and day difference. Me, I won't care. I'll just continue trading. Versus another trader who hasn't taken 100 trades, who doesn't understand their stats or knowledge behind the trading strategy, is going to be much more corrupt in his mind after 5 losing trades. You know, I understand I'll have, let's just say, for example, 50% win rate going for 2 to 1. I could lose. I understand it wouldn't be a big deal if I lose 4 or 5 trades in a row. I could lose 6 or 7, right? I understand over the course of 100 trades, you're probably going to lose at least 6, 7 trades in a row, okay? But with me knowing my stats behind that and I know I'm taking good trades, I will have a completely different mindset versus that trader that doesn't. You understand what I mean? Yeah, I would agree. Now they just don't pull the trigger because they're hesitant because now they think it's going to be a loser, right? And
Mm-hmm.
it got me into another question was 2 losses, not analyzing correctly, choosing the incorrect zone. Okay, you're having problem choosing the incorrect zone. It's because you're dealing with problems you don't know your system, right? You don't know what a quality zone is. You don't have rules to your trading strategy. You don't have an idea of what a good setup is. You don't have an idea of what your top-down analysis is. You don't know what you're doing. So you second question yourself, right? That's the problem, all right? And how do you fix this? That's the question. Okay, well, that's why you have you need to learn a proper strategy. You have to know it in depthly. What are the rules to this strategy? What are the rules to the theory behind it? What is a top-down analysis? What is a proper top-down analysis? What is a good setup versus poor setup, right? Okay, it has all of these things, but should I really be in this trade anymore? How should I manage this risk? How should I manage my take profit? Should I get out of this trade? Should I not even enter this trade anymore? These are all things that go into your brain that you can't just pick up in a video of watching YouTube. You can't do it, right? And so that's why I strongly believe like having that coach, next to you, showing you how to actually properly trade is so important, right? That's why you just learn from one person. And I think this is why Hamas actually said the thing that's holding me back is my strategy hopping and gurus saying that their strategy is 95%. I told you guys this before. I don't know a single profitable trader who has a 95% win rate. Most
Yeah.
profitable traders that I know are going to be somewhere in the category of usually 35% win rate to maybe 65% win rate, maybe maximum 70%. Okay, now of course, if you're going for just 1-to-1 reward to risk, you're going to have a higher win-loss percentage. But if you're going for like 2-to-1s, let's go 2-to-1s or 3-to-1s or multiple take profits, you're going to have a smaller win rate. All right? Because you're asking more from the market. And I talked to you about it before in our last meeting. This is how traders trick you, because they take 5 positions on a trade and they take their first take profit at, say, like 0.2 to 1, 0.2 to 1, let's just say. And so statistically, that is a winning trade. So if they take one take profit there and another one at 0.5, let's say 0.4 to 1, let's just say, and another at 1 to 1, and then they have, usually from there, they have one at like 3 to 1, and then one at like 10 to 1, right? And so when it really goes in their favor, they can actually, statistically, they truthfully can say, I caught a 10 to 1 trade, right? And they advertise this. But when the truth is 90% of their trades are not hitting that, okay? And they're getting out I'd say 70% of their position by this point at 1-to-1 trade. Now, if they win that trade, the first setup, the second setup, right, and they get stopped out on here and here at break even or a full loss, okay, they just won 3 trades and lost 2, okay? Or what it will go under is if they win this trade and they put their stop to break even slightly above break even, so they make like $1 on the trade, this counts as a winner, this counts as a winner. Congratulations, you are a 5 for 5 winner. This is how people are tricking you with their win-loss percentage. That's how they're doing it, right? And that's why they advertise 10 to win winning streak, right? 10 to 1 winners, but they're really just breaking up their orders. Nobody I know is getting 10 to 1 winners, 90% win rate, 60% win. I don't know a single trader that does it, okay? Most are going to fall somewhere in the line, I'll include this, 70% to 35% win rate, somewhere along the line. Long term, that's what you're going to be. I could pull you a sample size of 20 trades of where I won, let's just say 1-to-1 trade. Let's just go 1-to-1. I could show you a sample size of 20 trades, 1-to-1, where I would win probably 17 or 16 of them, winners, right? But I could also show you a sample size recently. I'll just talk about recently. Recently, over the last 12 trades I've taken, one of my trades has hit my second take profit of, I think it's 1 to 5. Okay, out of the last 12 trades I've taken, one of them has hit 1 to 5 reward to risk. Okay, but if I stretch that number from 1 to 12 to 1 to 15, okay, now it goes up to like 4 or 3 of my trades have gone 1 to 5. You know what I mean? So
Yeah,
this
varies a lot.
yeah. You can't be looking at small sample size. You have to be looking at a large sample size. Okay? And you can't be thinking that these trading gurus are producing results like this. If you think that, by all means, you're probably new, but every trader that I know that's profitable is never producing results like this. It's a big deceptive game. It's a greasy game. But the truth is, if I post a video that's talking about a 95% winner, you can make $10,000 a day, versus a video that's just me not calling it out, but like an actual breaking down stats and, providing value, 8 out of 10 people are going to want to watch that video, right? And so that's why those videos typically get a lot more views, likes. That's why people join them. But people that join those people are low-level quality traders. They're typically brand new, and someone in my position, I got to say thank you towards, because they do a lot of the advertising for the trading business, right? They get a lot of people into the business of trading. And so the people that I pick up from the people that realize that it doesn't work, right? And that's not how you properly trade. And those are the people that come and work with me. And so they typically have a brain, right? Versus somebody that's brand new into trading and thinks that they can produce results like that. I remember I made a video, average daily returns for a day trader, and somebody asked a question, and it was a poll question. And it was like 70% or 60% believe that they can make 3-to-1 in a day, like 3% a day. And I'm like calling us out about how stupid people are if they actually believe that. And I was breaking down the math. I said, look, dude, if you could actually make that, you would be a billionaire in like 2 years. You're not doing it. You know what I mean? People that do these challenges are 100% skewing people. It's just complete lies. You can't make 2% a day, 3% a day consistently. Sure, you could do it over a course of a month or 2 months. You ain't doing it for longer than 3-6 months, You're going to blow the account. Right? Which is another common question. These brokers, you got to keep an eye out, because there's brokers out there that will give these trading gurus live accounts, and what they do is they give them a live account, which is not a live account. They just give them the words live when it's really a demo. And they also give them the ability to delete losing trades. And so they get their broker to delete losing trades. And so it turns their negative graph into a positive graph. Anyways, just be careful out there, guys. Okay. So one of the biggest problems that traders are going to run into when it comes to trading psychology is getting emotionally attached to this trade, whether it's a winner or a loser. But not only that, the monetary value that they get from winning or losing that trade. Because I know a lot of traders that will trade successfully $20, but as soon as you stick them on $500 a trade, they completely fold, right? And so this is where other people's lifestyle comes into play. So if you take a trader who has $5,000 in a bank account and is making $2,000 a month working his job, well, that trader can easily trade, maybe $50, $100 a trade, okay? But you stick that same trader on now trading $1,000 or $2,000 a trade, that trader completely folds. Nothing changed about the trade setup, but everything changed in his head mentally because of the monetary value of that. This is why a lot of people that don't have a lot of money go for these funded accounts. They get access to like $150,000, $200,000 trading accounts, and they only have a net worth of like $5,000 or no money at all. And so they have all this capital and they have so much money that they can be, using in the markets, and they fold under pressure. They get out of the trades too early. They chase their losing positions. Okay, so that's why it's a big problem. Okay, and they're getting emotionally attached as well as, riding the win streaks and losing streaks. It's emotional roller coaster, right? And so you really got to detach yourself from that and detach yourself from the monetary value and drop your risk a little bit. But how do you also detach yourself? Lowering the risk, but also when you understand, when you have knowledge, experience, and confidence in your system, that all tends to drop over time because you're just playing a statistical game and you're just playing your trading plan, right? That's what you're doing. You're trading your trading plan, right? And so that will really help with that type of mindset stuff. And it's hard to fix it overnight. It is a time and experience type of thing, but definitely lowering your risk and understanding the stats of what you are doing in your trading plan will definitely help. Yeah. So Mond, I think this was a problem that we talked about earlier. I don't place enough trades. I managed to take one of the trades per week. Main issues I grew to the strategy is that I can trade the strategy from every time frame. I mean, you probably have 1 to 2 trades a week depending on the time frame sequence. This is why you can always add more time frames. You can also add different time frame sequences, add different trade setups. You can add more markets to look at. There's so many things that you can do. You lack the quality of probably understanding the strategy of what you're trying to do. You don't take a trade setup because you are afraid it doesn't work. So you're even saying, like, you even admit it right here, like, you're getting 1 to 2 trades a week, but you're second guessing yourself on a lot of them, and so you don't take the trade. Well, you would be taking more trades. The problem is, what's the answer, Yago? See if you've been listening. Why is he second guessing himself? 95% of your problems.
He's lacking confidence.
He's lacking confidence. Yeah, he's lacking confidence. Okay. 90% of your trading psychology problems will be solved with this. How do you do it? Back testing, knowing your trading strategy, reviewing, and adapting, right? Like, it's night and day difference, okay?
Getting more knowledge and experience as well.
Yes, exactly. Talking about creating a mechanical way of trading, like a mind map, a trading plan. This is a concept that everybody has to have, right? What's nice about this is you kind of have a step-by-step process of what a trade setup is. And so you always start off by, number one, start off by whatever top-down analysis you have, drawing out zones, determining the trend, all very important, right? And then you could break this into, is price inside higher time frame zone? Yes, and then you follow the next step, right? Wait for confirmation. Has price shown confirmation? No trade. Wait for confirmation, right? Yes, it has. What is the quality of the score? You know what I mean? It's a very mechanical way of trading. That's what's nice. And of course, you could add different things to say, like, can you 1 time frame short? Can you confirmation 2? There's little things like that will help you solve most of those issues on avoiding confusion, right? Is following a trading plan. Like, you have a very step-by-step process. But in order to do that, you have to know what a trading strategy is. You have to know what is a zone, what's a quality zone, what is a setup, how are you entering? You have to know that stuff by now. That's one of the hardest things to teach and talk about is discretionary trading and experience, like trade management, like we talked about at the start. How do you teach that? It's just like something you pick up over
Yeah,
time and experience, you know, which is,
like seeing it happen, right?
yeah, man. Like that's what I was talking about. Usually when it tends to do this and this, like this tends to happen. That's through thousands of hours of experience, you know?
Hmm.
And me seeing it with
Yeah.
my own eyes. Like that's what I'm trying to say. Like, do I expect you to pick that up? Heck no. Right? It took me a long time to, understand that. But time and experience, this is why I say that most of your problems, man, it's going to be time experience that's going to solve all your issues. When you review your trades, you see all these things that have in common with like, oh, only if I manage my trade like this, instead of me losing 5%, I would be up 20%. If I only did this and I stuck to 2-to-1 reward the risk and I only did this, I would be up actually 20%. But then you go and implement it, right? And you actually do get good results, but then you slip up, right? And you make a mistake, right? And then you go down another rabbit hole of making a different mistake. And it's just like constantly doing that. And you notice like, hey, when I do this, I tend to trade good. And then you trade good for, a little bit, you do well, and then you fall into another hole. And then you remind yourself what you got to do, and then you trade well, then you find yourself in another hole. It's constant battle. And that's why I always say, man, there's no naked girl at the end of the tunnel. Okay? It's a never ending process of trading, journaling, reviewing, and adapting. Always. I do not trade the same as I did last year. I did not trade the same as I did last year compared to the last 5 years. I'm always changing how I view the markets and how I'm getting better as a trader. It's something you have to do. So this was going to be our last group coaching call for the traders here in this free little Discord community. And what I was trying to do was to see what level of traders you guys are, what you do really well versus what you don't do really well, so I can future project a couple videos as well as my future post on social media. Not only that, but to give you a glimpse into what we're trying to do in the Moneyball trading program with the coaching calls, the 2x weekly coaching calls, as well as the daily chit chat and trade reviews and all that great stuff, right? So I would actually like to offer you guys for this end of experiment is to say thank you, as well as offer you a 30% off into the Moneyball trading program. You guys can join by hitting the link below, as well as moneyballtrading.com, and get access to that, where the whole goal is to create a profitable trader in 90 days. And the way that I have it lined up is I really pride myself in working directly one-on-one. You can't do it when you have like a massive Discord like this with 200 people or something, 300 people inside a Discord. It's hard to build a relationship and actually create a profitable trader when you're just filled with a bunch of low-level traders. Unfortunately, that's what it is, all right? You could join a group where it's 5,000 people where you don't even, the guy doesn't know your name that you're trying to learn from. You're paying some guy, you're just filled in there with thousands of other people, hundreds and hundreds of other people, where you don't get that time to actually work directly. And that's what it requires, right? And so that's something I pride myself with, is I work directly with everybody one-on-one throughout the program. And so when you join, it's going to be, you have full access to the whole course material. And after each lesson, I actually care and I want to make sure that you understand each lesson. So after each lesson, you will have homework to hand in that will be marked by myself. So after lesson 1, you hand in homework and a quiz. I mark it. That lets me know that you understand. If you don't, I get you to re-hand it in, okay? And that's the same on lesson 2 and lesson 3, because lesson 2 builds on lesson 1, lesson 3 builds on lesson 2 and lesson 1. Okay, so it lets me understand that you understand what we're trying to do here. All right, so for the first 30 days, this is why I like to say your whole goal is to absorb the core strategy. Okay, you're just constantly rereading the 75-page ebook every single day. You're going over the course material as much as you can. Okay, and the whole goal for the first 30 days is to understand the strategy of what we're trying to do. Okay, after that, during that time, over the course of the next month and a half from there, is going to be, that's where you take trade reviews. You hear back from my you hear back from my comments on the trades that you take. Hey, I really like what you did here, here, here. I don't like what you did here, right? It's much more in depth in these meetings where we talk about this, and it's open mic, okay? Where it's a high level of traders. And of course, at the end of the 90 days, or whenever you have 30 to 40 trade reviews, you reach out to me and you say, hey, I have 40 trade reviews. Can we conduct our one-on-one? That's when we will sit down one-on-one and I'll look at all of your trades and I'll come back to you and I'll say, hey, I think you should be focusing on this, but I also want you to come up with a list of 20 things and I want you to see it for your own eyes if you can spot something, right? And so we're trying to sharpen your eyes of what a quality setup is. You saw me do it here in this meeting, and that's what I do with every single trader. So I pride myself by not just, treating everybody else like another number. I work directly with everybody one-on-one, as well as our weekly coaching calls, right? So that's something else that you're going to have if we go check it out. You're going to have the whole system. You're going to be access to our weekly coaching calls. That's what you've been experienced and seen so far. Every Sunday and every Wednesday, we have those 2x weekly coaching calls. You'll have access to that whole Discord community. You'll have the access to that one-on-one, and like I said, the quizzes and homework and your own trading plan. So I would love to have you guys part of the program. This is just going to be a quick little weekend special out of the blue, middle of the summer. I appreciate you guys watching my videos, being part of this Discord and helping me grow this channel. But I want to help you by working directly with one-on-one with you. Okay, so check it out, moneyballtrading.com. The link will be in the description as well for you guys to join. 30% off weekend, and I look forward to working with you guys. If you guys have any questions, you guys can always reach out to me on social media at MoneyBallAustin, Facebook, Twitter, Instagram, and I have no problem helping you there. All right, appreciate if you guys like the video, and I will see you guys in the next one. Cheers. Bye-bye.